Wise shares fell as much as 11% in early London trading on Friday after the U.S. Office of the Comptroller of the Currency rejected the fintech's application for a national trust bank charter. The regulator's letter pointed to long-standing deficiencies in Wise's anti-money laundering controls, and a management team it said lacked sufficient banking law experience. The setback lands months after Wise shifted its primary stock listing from London to NASDAQ, a move its chair called access to the biggest market opportunity for its products today. The trust charter was the mechanism meant to justify that pivot. It would have let Wise settle U.S. dollar payments directly through the Federal Reserve, instead of routing them through partner banks. The U.S. accounts for close to half of Wise's cross-border volume, which reached $243 billion in its 2026 financial year. Direct Fed settlement would have brought that flow into line with the connections Wise already holds in the UK, the EU, Singapore, and Australia. For a company built on cutting out middlemen, being told to keep paying other banks to move its own dollars is the opposite of the thesis it sold investors.
Wise's own statement insists its business and compliance maturity have evolved significantly since the original filing more than a year ago. The company points to strengthened anti-money laundering processes, better customer data, and increased compliance resources as evidence the gaps the OCC once found have already been closed. The regulator's letter tells a different story. It cites long-standing deficiencies in anti-money laundering and counter-terrorist financing controls, and concludes the proposed management and board lacked sufficient expertise in fiduciary activities and banking regulation. That is not a dispute over one fact, but two institutions reading the same compliance record and arriving at opposite conclusions. Wise carried a multi-state consent order from a $4.2 million anti-money laundering fine settled last year, and Belgian prosecutors have separately opened an investigation into roughly 500 million euros in transactions flagged as suspicious across the platform. Read against that history, the OCC's rejection looks less like a single misstep and more like a regulator pricing in a pattern Wise says is already behind it.
Wise says its day-to-day U.S. business is unaffected, still operating under money transmitter licenses across 48 states, and that it intends to file a fresh trust charter application under the Genius Act, the new U.S. framework governing stablecoins and digital payment infrastructure. The company argues the changed regulatory landscape gives this route a clearer path than the one just rejected. For a holder, the trigger to watch is not the share price, but the substance of that refiled application, whether it addresses the specific fiduciary and anti-money laundering gaps the OCC named, or repeats the structure the regulator just turned down. For a watcher on the sidelines, the same filing is the confirmation signal. A Genius Act application that visibly closes those gaps, alongside continued growth in Wise's U.S. cross-border volume, would make this drop an entry point rather than a warning. A second rejection on the same compliance grounds, or a fresh regulatory finding before that filing lands, would confirm the trap instead. That refiled charter application is the single checkpoint that decides which reading holds.